traditional stock classification systems like GICS are failing momentum traders. Now, these mega trend, the monster stocks, the leading companies and themes, they don't conform to the standard classifications. That's the important part here, a single GICS sub-industry, according to the definition of its principal business activity. Fair enough. Successful trading of the best market performers in this period, well, any period, and over the last 120 years, it's come from identifying the market-leading themes, that megatrend, the thematic that's really driving market performances. We've created over 400 categories of similar companies on the ASX, lithium, uranium, cobalt, copper, buy now, pay later, and so on. Now, these companies, they move to the same economic drivers. And we calculate all of the momentum scores to know which market theme is leading, which ones are rising, and which ones are falling. That's important as well. And each week, we're analysing the strongest charts, finding the themes, and sharing the market leaders. Join the channel as a member, and you'll get exclusive market leader lists, and subscribe to get the videos as soon as they're published, like these top 6 stocks. Did you know that traditional stock classification systems like GICS are failing momentum traders? The market leaders of today with the biggest returns move in groups of companies and belong to a theme. Think about the strongest companies over the last few years. Artificial intelligence, lithium, uranium, electric vehicles, big technology. These themes have provided momentum traders with the best opportunities available. Now, these mega trend, the monster stocks, the leading companies and themes, they don't conform to the standard classifications, and we're going to explain why with a better solution. We'll do that by using examples of the best performing companies over the last few years, as well as well-known companies that are household names. So what is GICS and why is it failing investors? We use an infographic provided by GICS to have an understanding. Right at the top, you can see there are 11 sectors: energy, healthcare, financials, information technology, industrials, and so on. Provides a quick snapshot of any market in the world to see where they're heavily weighted. Australia, South Africa, Canada, heavily towards materials and mining. NASDAQ, obviously pretty heavily towards the information technology side of things. It's a good snapshot, but it doesn't work for momentum investors. You come down from the 11 sectors on the first layer, you've got 25 industry groups, 74 industries, and 163 sub-industries. This is the important part, the sub-industries, because if there's a theme driving, like artificial intelligence or lithium, we'd expect that there'd be really close peers within these companies, these sub-industries, and that's where we can use it to capitalize on the momentum and find the best trades. But there's a bit of a problem in this. It comes from how it's classified, and to do that, we just have a quick look at where it came from. Morgan Stanley's, Standard & Poor's, they got together 1999, and what they were trying to do is find an industry analysis framework, and what they wanted was a universal approach to industries worldwide. They got that spot on. It works really good for fundamental investors really well, and it's a good way of comparing portfolio versus portfolio, but not momentum traders. The problem comes in with how it's assigned to a GICS code, each company. They assign a company to a single GICS sub-industry, a single. That's the important part here, a single GICS sub-industry, according to the definition of its principal business activity. Fair enough. They also say they take into account things like earnings analysis, market perception, and so on. I'm yet to really see that. If it does move, it moves at a glacier pace, and momentum traders have come and gone, and the Thematics over by then. So, if you're using GICS, we're really interested to know. Leave some comments below. Are you using GICS to help your trade, your momentum trade, and find the market-leading themes? Does it work for you? Does it have limitations? Are you using something else? We're really interested to know because, well, this is what we do a lot of the time. So, leave your comments below. Now, how does this GICS classification actually work? We're going to use some examples here and some examples that a lot of traders in Australia may have used, particularly if you follow the lithium trade. Now, one of Australia's largest lithium plays was PLS, or still is Pilbara Minerals, PLS. Now, looking at the chart here, we can see over the period of 2020, ramped up 2021, 2022, that's where we were doing a lot of lithium trading. Huge amounts, and it was driving the market, going insane. Another trade, or another stock that was traded at the same time, was Oracle brand Galaxy Resources that became Allchem. We use the chart of Allchem because that combines the two after the merger, and that's what we have access to in this software. Now, that was another strong lithium play during the 21-22 megatrend of battery minerals, and lithium was really driving that. So, when we look at Pilbara Minerals, how does the GICS classification look at a company like Pilbara that's heavily exposed towards battery minerals and lithium particularly. We look at it at the hyperlink down below. This is a highlighted blue area. The sub-industry, remember up above, the important bottom layer, diversified metals and mining. Fair enough. If that's how they look at PLS with a high exposure to lithium, let's try to find some other lithium companies in there and use that group to identify the theme and understand if that's a market leader. Allchem, well, that was Oracle brand Galaxy coming together. Same bucket. Fair enough. That's probably where they're keeping the lithium companies. So let's use that to zone in and really understand how this whole group is performing against the rest of the market. Are they the market leaders? So to do that, we want to know which companies on the ASX fit into this same group, diversified metals and mining. We've got BHP, Rio Tinto, South32. The names aren't really sounding very lithium focused. Mineral Resources, okay, fair enough. Pilbara Minerals, great. Lynas Rare Earths, the name's a bit misleading if we're looking for lithium companies. As you go through this list, Nickel, Iluka, Liontown Resources, okay, great. You're seeing it's very mixed and diversified, as the name suggests. But we'll give it the benefit of the doubt and we'll run it through and look at the charts for comparison. We'll put the big ones in here, BHP and Rio Tinto. And we're also going to put Liontown Resources in here a bit further down, but the chart was phenomenal and it was a great trade during the lithium play. We're also adding in Fortescue Metals, steel, and we'll come to that in a second, as well as the iron ore price, spot price, to help us give a bit of a benchmark of what's driving these big players up here, because we've got a hunch that's what's doing it. Now, we use what's called a common base chart to have this kind of analysis. Over on the far left-hand side, where we start the date, everything starts at a base number of 100. And then as time progresses, it goes up on a logarithmic scale. We're using logs because if we didn't, the lithium performances would eclipse the bottom ones so much that they'd be a flat line at the bottom. So the lines at the bottom, the blue line is the iron ore spot price. Okay, we've got the green line as BHP, red line is Rio Tinto, and purple is Fortescue Metals. Just looking at these ones at the bottom, there's a high correlation. If you suggested that, I definitely agree. So we're seeing that they tend to follow what's happening with the iron ore price. Fair enough. BHP, Rio Tinto, Fortescue Metals. Most traders in Australia would agree with that. If you're trading the iron ore spot price, these are good proxies or good ways of trading that in the share market. What are the other ones that are in the same group that we threw in here? We've got PLS being the brown line. Starting at 100, it got to 1,317. That's a massive return. Liontown Resources, 2,470. That's monumental. That is a monster stock. That is a mega trend that we like to trade, and we were trading throughout that period. Allchem fits into the same boat, but it's 482 coming from a base of 100, so adding on 382% gains over that period. Good trading stocks, but it's a far cry from what Rio's got at 105, BHP 128, and Fortescue 113. I dare say they're going to follow that iron ore price. That's where they're... So we've got divergence within this GICS group. That becomes part of the problem. Let's explore that a little bit further, because if we think Fortescue's got a good correlation, then maybe it's just the diversified group that's off. Maybe GICS is only just not working for diversified. So let's give it the benefit of the doubt and explore that one a bit further. We're going to compare some other steel companies, because Fortescue Metals sits within that steel sub-industry group. Let's have a look at those steel companies and see how they compare. So we're going to put in there three other steel companies, BCB, SMR, and CRN. They're three codes that we know that fit in within this sub-industry group. At the same time, we'll keep the iron ore price in there, the spot price, and BHP and Rio Tinto, because they did correlate well with Fortescue. Let's have a look at that chart. Well, we've got the same numbers, same charts down the bottom. The blue one's iron ore, red for Rio, BHP's green, Fortescue's purple. Yes, that looks very similar to before. You're coming from the base number of 100 on the left-hand side. But if we want to look at steel companies like Fortescue Metals that are in the same group, we'd expect them to maybe have an even stronger correlation than the BHP and Rio that are not in the same group as Fortescue. Doesn't turn out that way. We've got these BCB shooting up 450%. 450 is where they're ending, so 350% gain. They got much higher. SMR, CRN, so Coronado, Stanmore, BCB. We know these are coal companies. So what's happening here is we've got this GICS classification of a sub-industry within steel, but within that group, you've got one, which is Fortescue Metals, following the iron ore price, and these three others following the coal price that was on an absolute tear. Yes, they come together to make steel in the industry side of things. But if we're trying to trade a company based on the macroeconomic principles, the tailwinds and economic forces that are driving it at the time, well, these GICS classification systems are not helping us as momentum traders. So there's a bit of a problem there with how this works and how they set up. Remembering that was log scale, so again, these bottom lines would be paled into insignificance. We all know from a quick bit of research and trading in companies in Australia that they're not. They're different. Coal and iron ore, two different commodities, and if you're going to trade them, you're going to trade a different group of companies, but you can't use a GICS classification system to help you find them. There's got to be another way, because they're dancing to the beat of different drums. So when we're trading miners in Australia, we know if we're trading lithium, nickel, copper, cobalt, gold, uranium, we want a specific theme. Unfortunately, they're pretty much all bundled into that one group or mixed into other groups like steel, and you really can't get a clear line of who the peers are and how they're trading. So there's got to be a better way. It also works similarly for other industries. We've seen it with buy now, pay later. But if you think of the other themes that we've had in the market, if you're thinking of AI thematic, you're going to think of NVIDIA. If you're thinking of EVs, you're going to think of Tesla. If you're going to think of big tech, you're going to think of Microsoft and Google. But the GICS classification systems doesn't necessarily bring your peers together. Buy now, pay later, they were spread across 3 different industry groups. Sectors at the top, I should say, not just sub-industries. So what about lithium? Because we do trade a lot of lithium, and we do know a lot of viewers trade lithium. So BHP is the global leader in that diversified group that the lithium is in the sub-industry of. It shares that with BHP. So we want to get a gauge, is that any use at all? We've picked out here 10 lithium leaders that we traded throughout that 2021 to 22 period of the battery minerals and lithium megatrend. They're all starting here at 100 on the left-hand side once again, and then they're breaking out explosively over the next year or so, getting up to phenomenal returns. 6,400 is where this log chart goes up to, remembering that BHP is staying at 132 at the end of it. So 6,400 is where it's peaking. These are explosive movers. It's fair to say that the lithium sub-trend within the sub-theme within the sub-industry is really where we want to focus, and it's got nothing to do with BHP, or to really have very little to do with it. So that's where it's failing. Now, these 10 names, we actually studied them in quite a bit of detail because we do monitor lithium. We do monitor a different group of companies in the thematics that actually drive the market forces, where we do see the sentiment really driving these companies. So this is just one video that we did at the time of these 10 names and looking at the volatility contraction breakouts during this period. So your Liontown, your PSC, your VUL, Allchem, Newmont, Lake, PLS, Anson, and so on. They're just some of the lithium names that were breaking out. And that's what we look at on a detailed focus on lithium. So putting this all together, then successful trading of the best market performers in this period, well, any period, and over the last 120 years, it's come from identifying the market-leading themes, that megatrend, the thematic that's really driving market performances. And we don't need to look much further to see the world's best traders doing a very similar thing. The US Trading Championships. We studied them. They're momentum traders. They trade the leading market themes and the best shares within those themes. Gary Glover's done a whole video analysis of the approach of these great momentum traders now and of previous decades. We'll put a link on screen so you can go and view that if you want to see that in more detail. But what is the solution if we can't use GICS to identify the leading thematic that we need as momentum traders to be on top of those mega trend and themes that are driving top market performance? What is the solution? Well, to identify the market-leading themes, we've created over 400 categories of similar companies on the ASX: lithium, uranium, cobalt, copper, buy now, pay later, and so on. Now, these companies, they move to the same economic drivers, like battery minerals, lithium miners, nickel miners, uranium exposure. And we calculate all of the momentum scores to know which market theme is leading, which ones are rising, and which ones are falling. That's important as well. And each week we're analysing the strongest charts, finding the themes and sharing the market leaders. So on screen here are just some of the lithium videos that we've done over the period, and this is just as lithium is leading. We're consistently surfacing the top 6 companies, so we know, just like the world's best traders, and see how they win the US Trading Championships, momentum traders look for the leading theme, lithium's the top theme, and then we want the top companies within it. We look at the top 6, and that's what we're consistently surfacing and we're looking through and working through. So we know that if you want to stay on top of it, as momentum traders, we want to know which companies are leading. We want to know the strongest market themes, and we want to be on top of rising market trends. Join the channel as a member, and you'll get exclusive market leader lists, and subscribe to get the videos as soon as they're published, like these top 6 stocks.